Breaking news, the world just witnessed a trade earthquake, and this time the tremors started in Ottawa. For the first time in modern history, America's closest ally has just sided with China. Yes, you heard that right. Canada, the country that built the North American dream alongside the United States, has turned east. Moments ago, Prime Minister Mark Carney stood before a wall of red and white flags and uttered 12 words that sent shockwaves across global markets. Canada will not be a hostage to anyone's tariffs. Those words detonated through Wall Street like a financial bomb. The Dow Jones plummeted 2.4%, wiping out over $600 billion in market value. Meanwhile, Canada's TSX surged, and the Canadian dollar shot up 4 cents in a single day, its biggest leap since 2016. What started as a tariff dispute is now being called the biggest realignment of Western power since World War II. Trump's 100% tariffs were meant to protect American jobs. Instead, they pushed Canada into China's arms. Tonight, we break down how one executive order shattered the world's strongest alliance, ignited a $200 billion economic pivot, and left Washington wondering, has America just lost its most loyal friend? This is cross-border news. It began with a signature, Executive Order 14,278, issued from the Oval Office under glaring lights and a defiant smile. President Donald Trump called it a protection plan. But to Ottawa, it was an act of economic war. The order placed 100% tariffs on every major Canadian export: steel, aluminum, automobiles, and lumber, nearly $48 billion in cross-border trade gone overnight. Factories from Detroit to Seattle felt the impact instantly. General Motors warned of a 25% jump in component costs within weeks. Ford's managers reported entire production lines halted for lack of Canadian steel sheets. Even Boeing, sourcing aircraft frames from Quebec, quietly delayed orders. Trump had promised to make America stronger. Instead, U.S. industries began bleeding cash. Housing costs soared as lumber prices spiked 14%. The average cost of a new American home rose by $12,000 in a single month. Small builders filed for bankruptcy. In the Midwest, families already crushed by inflation now faced higher mortgage rates as investor confidence crumbled. The S&P 500's industrial index nosedived. Wall Street analysts called it a textbook case of tariffs turning inward. Behind Trump's populist rhetoric was a dangerous paradox: protection that harms the protector. By trying to wall off America, he walled off its own prosperity. And while Washington flexed muscle, Ottawa was preparing something far more dangerous: a counterpunch the world never saw coming. It was dawn in Ottawa when a gray government jet lifted off under secrecy. No flags, no press, just silence. Inside were Mark Carney's top economic and energy officials bound for Beijing. Their mission wasn't diplomacy, it was survival. Behind the red doors of China's Great Hall of the People, talks stretched for 14 hours. When the final handshake came, history shifted. Canada had just signed a $200 billion decade-long alliance with China, the largest economic pivot in its modern history. The deal was staggering. Beijing would import 4.8 million tons of Canadian LNG per year, 15,000 tons of uranium annually, $12 billion in Canadian agriculture each year. In return, China's AIIB pledged $25 billion for railways, ports, and Pacific gateways, connecting Canada's resources directly to Asian markets. It wasn't revenge, it was a lifeline. For decades, 75% of Canadian exports flowed south to the U.S., but under Trump's tariffs, that lifeline turned into a chokehold. Carney's team knew that dependency had become danger. So when the world woke up to the news, Canada's markets exploded with confidence. Gas futures jumped 12%, uranium shares soared nearly 10%. And across British Columbia, thousands of new jobs were announced in ports and LNG terminals. In one stroke, Canada rewrote the rules of the continent from dependence to defiance. The morning after the news broke, Washington exploded. Within hours, every screen in the White House Situation Room glowed red. Fox News branded Mark Carney Beijing's man in Ottawa. Senator Marco Rubio thundered, calling it a betrayal of the continent. The word Nordexit trended worldwide, a chilling echo of Brexit, only colder, closer, and far more personal. Trump's aides described him as furious, pacing, and disbelieving. For decades, Canada had been America's shadow in every war, every trade deal, every alliance. But now its oldest friend had just crossed the line Washington swore no ally would ever cross: economic alignment with China. In the U.S., talk shows framed it as treason, but north of the border, the air crackled with pride. In Toronto and Calgary, headlines declared Canada stands tall. Carney's approval rating surged past 60%. For millions of Canadians, this wasn't betrayal, it was emancipation. A University of Calgary poll revealed the shift in mood. 72% of Canadians supported cutting U.S. dependence, while nearly half believed Carney's pivot was protecting Canadian jobs. From Quebec's shipyards to Alberta's oil fields, workers saw hope returning to an economy Washington had once strangled. One steelworker's words captured the national sentiment. "We're not turning our backs on America, we're just tired of being told what's good for us." In Beijing, state media called it a partnership of resilience. In Washington, senators called it a fracture of trust. But on the streets of Ottawa, it felt like history, the first step of a nation no longer walking behind its neighbor but beside it. Carney hadn't declared war. He declared independence, and the world had just watched the North grow up. Weeks later, the leak hit global markets like a lightning bolt. A confidential IMF report stamped for internal review only was obtained by Bloomberg. Its title was chilling: Continental Realignment with Systemic Consequences. The document revealed what Washington had feared most: Canada and China were constructing a new economic artery stretching across the Pacific, a network analysts dubbed the Northern Belt. For decades, America had viewed China's Belt and Road Initiative as a challenge reserved for Asia and Africa. But this was different. This was its own backyard. The Northern Belt would fuse Canada's energy, minerals, and Arctic infrastructure with Beijing's industrial machine, a Western extension of China's global project. China committed $11 billion into Canadian nickel, lithium, and uranium, the holy trinity of the green economy. In return, Ottawa secured guaranteed markets, AIIB financing, and full access to Asian trade corridors. Washington's reaction? Denial. Officials called it symbolic, claiming Canada wouldn't dare drift that far east, but markets told a different story. Within a week, oil prices jumped $7, uranium rose 14%, and U.S. LNG exports to Asia dropped 9%. The IMF's warning was blunt. If Canada and China integrate supply chains, the United States risks losing up to 20% of its regional influence. It was more than trade. It was a tectonic shift in power. Investors began calling Canada a geopolitical hedge. Analysts named Carney's project a westernized belt and road. For Beijing, it was validation. For Ottawa, it was liberation. The North had just redrawn the map, and for the first time in a century, America wasn't at the center of it. The numbers came in quietly, and they hit harder than any missile. Within 3 months of Canada's alliance with Beijing, U.S. exports to Canada collapsed by $41 billion. What began as a political gamble had become an economic implosion. From Detroit's auto plants to Ohio's steel mills, the fallout was immediate. 450,000 American jobs vanished almost overnight. Ford and GM halted overtime shifts. Tool and die factories in Michigan posted hiring frozen signs. In Illinois, Caterpillar reported a 17% drop in component orders. Even refineries along the Gulf Coast, once fueled by steady Canadian crude, began scaling back production. The Dow Jones Energy Index fell 4%. The S&P Industrial Index dropped 3.8%. Gasoline prices climbed 11%, and homebuilding costs jumped another 9%. For American workers, this wasn't an economic headline, it was a paycheck disappearing. In towns like Toledo and Youngstown, welders stood outside shuttered gates clutching pink slips. One worker told local reporters, "We didn't just lose Canada, we lost our future." Political chaos followed. Trump's loyalists on cable networks claimed the collapse proved globalization's failure, urging him to double down on tariffs. But economists at MIT and Brookings called it the strategic blunder of the century. America's greatest strength, its integrated markets and reliable allies, had turned into its weakness. Decades of trust shattered in a single quarter. And as Canadian ports lit up with new Chinese ships, American factories went dark. What Washington saw as protection, the world saw as self-inflicted isolation. Trump wanted to make America strong again. Instead, he had shown how fragile the empire had become, one ally walking away at a time. The aftershocks didn't stop at the U.S. border, they rippled across the planet. In Geneva, IMF officials gathered for an emergency session. The leaked Canadian-Chinese trade pact had shaken the global order. One delegate whispered to reporters, "We're witnessing the first fracture of Western unity since the Cold War." Within days, global capital began to move quietly, decisively. Asian sovereign funds started dumping U.S. treasuries and buying Canadian bonds instead, backed by real assets: nickel, lithium, uranium, and LNG. Toronto and Vancouver became the new financial safe havens of the West. Gold surged past $2,550 an ounce. Oil slipped below $70 a barrel, and Wall Street traders whispered a new phrase: post-American economics. In Europe, nervous analysts warned that Canada's defiance might spread. If Ottawa could walk away from Washington's dominance, who was next? Berlin, Tokyo, Canberra, the balance of trust had shifted. America was no longer seen as the stable anchor of the West, it was the unpredictable variable. And Mark Carney, once seen as a quiet technocrat, had become the face of a new economic rebellion. In Beijing, Chinese officials toasted the Northern Belt as proof that multipolar trade was no longer theory, it was reality. In Washington, the silence was heavy. The empire wasn't collapsing from attack, it was unraveling from arrogance. The shock wasn't that Canada turned east. The shock was that the IMF validated it, admitting the math had changed, the world had changed, and power itself had shifted north. And for the first time in living memory, the United States wasn't the gravitational center of global trade. It was just another orbiting economy. What began as a desperate counterattack soon evolved into a new philosophy, Northern non-alignment. Mark Carney described it simply, Canada will cooperate with everyone but obey no one. It was a bold echo of India's Cold War neutrality, balancing between superpowers without being swallowed by either. But this time, it wasn't ideology driving it, it was survival. Under Carney's doctrine, Canada transformed from Washington's junior partner into a broker between two giants. Beijing needed stability, Washington needed relevance. And suddenly, both needed Canada. The Arctic trade routes once reserved for NATO patrols now hosted tankers carrying LNG under mixed Chinese-Canadian flags. At summits, Carney stood between American envoys and Chinese ministers, the only Western leader both sides trusted to mediate. In Ottawa, the narrative shifted from crisis to confidence. Exports stabilized, inflation eased, and the Canadian dollar held firm. Economists began calling it the Carney paradox, the idea that standing apart from America made Canada stronger. But not everyone was celebrating. Critics warned of overexposure to Beijing's influence, calling it independence with strings. Still, the numbers silenced doubt. Billions in trade recovered, jobs returned, and the northern economy roared back to life. Carney's gamble had become gospel, a blueprint for how middle powers could thrive in a divided world. And as the U.S. struggled to adapt, one truth echoed through boardrooms and parliaments alike. The age of automatic alliances was over. From the ashes of tariffs and mistrust, Canada had built something rare: sovereignty through strategy, not rebellion, not surrender, but balance, the kind that reshapes history. In Washington, the lights of the Situation Room glowed cold blue against sleepless faces. Maps, charts, and trade flows blinked across monitors like vital signs of a fading empire. Every line pointed north to Canada. Every arrow curved east to China. A senior advisor broke the silence. "We've lost the corridor." No one argued. They all knew what it meant. The arteries of North American dominance had been severed. Meanwhile, 10,000 kilometers away in Beijing, the chandeliers of the Great Hall gleamed as glasses clinked in celebration. Chinese officials toasted what state media called the peaceful turning of the tide. A Western ally had just joined the East without a war, without a treaty breach, without firing a single shot. On Wall Street, traders stared at plunging U.S. Treasury yields. On satellites, the Arctic routes once patrolled by NATO glowed with new Chinese-chartered tankers. And in Ottawa, Carney's words echoed across Parliament Hill. "We will no longer define ourselves by proximity but by purpose." Trump's tariffs were meant to isolate China. Instead, they had isolated America itself. The Canadian dollar held strong at 76 cents US, backed by Asian demand, while the greenback weakened under the weight of lost trust. The Economist's headline said it all. For the first time in 150 years, America's closest neighbor is looking east. The age of unilateral power was over. The United States hadn't been defeated, it had been outgrown. What collapsed in 2025 wasn't just trade. It was certainty, the belief that America would always lead. And as new trade routes lit up from Vancouver to Shanghai, one truth became undeniable. History had turned, and this time the North didn't follow. It ended not with a war, but with a choice. A nation that had once stood in America's shadow decided to face the sun on its own terms. Trump's 100% tariffs were meant to protect U.S. industry, but they triggered something far greater. The unraveling of the post-war order itself. What began as economic bullying turned into a global awakening. Canada didn't fight back with soldiers or sanctions. It fought back with strategy, patience, and precision. Mark Carney's $200 billion pivot to China wasn't just a deal, it was a declaration. A declaration that the age of dependency was over, and the North had learned to stand without permission. For Washington, it was humiliation. For Beijing, validation. And for the rest of the world, revelation. Because if even America's closest ally could break free, then the myth of U.S. inevitability was gone. Across the Pacific, new routes glowed like veins of a rising era, ships bearing both maple leaves and Mandarin logos, carrying not just goods but proof that the balance of power had shifted. This wasn't betrayal. It was evolution. The West is no longer one voice, it's many. The world is no longer ruled by one currency, one capital, or one country's confidence. Canada didn't destroy the old order, it outgrew it. And in doing so, it forced the planet to ask a question that no economist, no president, and no superpower has yet answered. When allies stop obeying and start choosing who really leads the world, this is cross-border news. Where history doesn't repeat, it realigns.